Well, hello. Welcome to Brainfood Bytes. I'm Larry Pond, a member of the CalCPA PFP committee, and today we're going to talk about Trump accounts. And the reason we're talking about Trump accounts today is because we just recently got some proposed regulations from the US Treasury. So let's talk about the quick background on the Trump accounts. They were introduced by the One Big Beautiful Bill as Code Section 538. So that's the initial introduction we got to Trump accounts. Then the IRS gave us a notice at the end of the year, IRS Notice 2025-68, that gives a lot more guidance. And then we got Form 4547 to elect into the Trump accounts. And we have instructions to the forms, a very good set of instructions with a lot of good details. So the proposed regulations actually come in two parts. The first part are proposed regulations for Section 530A to talk about the Trump accounts and how they operate and those kind of things and some details there. And then the second set of regulations, which is about the same length, is proposed regulations of Section 6434, which relates to the $1,000 pilot contribution. A lot of details to that. So I highly recommend you take a look at that. We'll have a link on the screen of where you can read them. And also, we'll also provide you with a phone number of who wrote these regulations in case you have some questions or comments. You're probably not going to talk to the actual author. You'll probably leave a voicemail, but leave a succinct voicemail if there's some parts of it you don't agree with or you don't understand. So let's talk about a quick summary of how these Trump accounts work and some questions and some planning issues we need to think about. So it's a new savings account for children under age 18. The earnings will grow tax deferred, and when the beneficiary takes the money out of the account, they'll pay taxes on it. So there's a non-deductible contribution of $5,000 a year per beneficiary. Those could be from the parents, grandparents, or anybody. Also, there's the employer contributions, a new code section 128, where employer can contribute $2,500 per employee to their Trump account. That $2,500 tax-free to an employee, deductible by the employer. And that's going to be reported on code TA in box 12 of the W-2 starting next year. So the eligible child is under age 18 at the end of the year, has a valid Social Security number, and a U.S. citizen. And since they're minors, you need a responsible person to make the election for these accounts. And it goes in this order. You have the legal guardian, the parent, an adult sibling, or grandparent. And so this goes on the top of the form 4547. The eligible child is in part 2 of form 4547. And then we have 3 periods to consider. We have the election period. That's where you file Form 4547. It can be filed with the tax return or a standalone paper form, but it's filed electronically separately. So you'll see an 8879-TA. You can also apply for them on trumpaccounts.gov. But I personally think it's easier to do 4547. And sometime in May, we'll get an activation process for these accounts. So it's important to make sure you enter the responsible person's email address. The second period is what's called the growth period. These are when the children up to age 18. It ends when they turn 18. And this is when you can make the $5,000 contribution by the parents or grandparents. The Treasury will make the $1,000 pilot contribution for babies born in 25, 26, 27, and 28. It's free money. There's no AGI restriction. It's just that they just have to be born in those years. And then there's the qualified general contributions with no limit. They could come from government agencies such as states, cities, counties, Indian tribal governments, or charities, tax-exempt organizations, which includes private foundations. So the first one we have is from Michael and Susan Dell. They are contributing $250 for children who are 10 and under who live in zip codes with median incomes of $150,000 or less. So even if you have children who are born before 2025, but you have children under age 10 and under, then you can sign up for this $250, but check the zip code to see what the median income is. Now, during this growth period, no distributions are allowed except for some qualified rollovers. We'll talk about that in just a second. The third period is after they're 18. This is when the growth period ends. No more contributions can be made to the account. And then this is when the child can take distributions from the account. So the earnings portion is taxable and the basis is not taxable. However, this is at the time where you can roll it over to a traditional IRA or roll it over to a Roth IRA, which would be a Roth conversion. So again, there's some planning we need to do to see how much of a Roth conversion we do every year and how's that can impact their tax liability, financial aid, and those kind of considerations. And since it becomes an IRA account, it will be subject to the 10% early distribution excise tax unless you meet an exception, such as first-time home buyers, such as higher education. And there's a whole list of them on Form 5329 to take advantage of that. Now, why do we recommend rolling it over to an IRA account? Well, it's because when it's a Trump account, it can only be invested in the S&P 500. Well, if it's an IRA account, you can invest it in almost anything you'd like. So the tax impact on this is that the earnings are taxable and there's no basis for that $1,000 pilot contribution, the $250 from Michael Dell's contribution, and the employer contribution. No basis there. But the only basis you have would be that $5,000 contribution per year. So anything above that will be taxable. And we have some questions too about that because who's going to calculate that? Are we going to have to calculate that? Is there going to be a Form 8606? Or is it kind of like what the 529 accounts are doing where we get the 1099, it reports the gross amount and the taxable portion. So when it's in the growth mode, yeah, we can't take any distributions. But what you can do before they're 18 is you can roll it over to another Trump account because we don't know which financial institution the Treasury is going to select to set up these accounts. Maybe you want it at Schwab or Fidelity or another investment company, but you're still restricted to the same S&P 500 investment. Or if there's an excess contribution, let's say grandma made a contribution, the parent made a contribution, and it was too much, so you can remove the excess. That's a permitted withdrawal. Or if the beneficiary dies, the taxable portion be taxable to the beneficiary. Now, there are certain other qualified rollovers, such as rollovers to an ABLE account, but there's some restrictions there to look at. So while it's in the growth mode, you can't take money out of it. So the proposed regulations go into details about how to open the initial accounts and then details on the pilot program. And it goes into definitions, requirements, and all those kind of things. A lot of minute detail that you should take a look at. But we have some questions about Trump accounts that we should be asking in advocacy, such as you can only have one Trump account. Well, what if you have parents who aren't married to each other? Under the current rule, these contributions, the $5,000 contribution does not qualify for the annual gift exclusion. I hope that gets corrected, because who wants to file a 709 for a $5,000 contribution? How about California tax? It doesn't conform because this was passed on July 4th of 2025. California conformity is as of January 1st of 2025. So again, we need to get some advocacy on that to get some conformity, because otherwise there's going to be a bit of confusion. So take a look at the links we have on the screen for more information, and there's some numbers to call directly to the IRS people responsible for this guidance. So thank you for coming today. Keep an eye out for an upcoming Wealth Wednesday episode, a little more deeper dive on Trump accounts. And thank you for coming today, and I'll see you again. Thank you.